This video presentation of MELA Sciences. It's a NASDAQ listed stock, trading our ticker MELA. Technical traders will see right off why we're putting this chart on radar. Pretty firm double bottom right here at 65 cents. That's going to be the key area of support that has to stay intact. But the stock made a move on Thursday, pushing up over 7.5% on a little bit of an increase in volume to 541,000 shares traded. And with that move off of that support, it's worth paying attention to, not only for the support to stay intact on any pullback, but the last time it moved off that support level, see it went all the way up to highs of $1.04, which is pretty substantial gains from these current levels. Looks like a bullish cross is going to happen with the MACD. That's judged by the histogram bars trending back towards zero. Overall, that's a pretty nice uptrend in the MACD, which is a positive divergence as the price per share has been trending down. MACD has been trending up. That's a pretty decent sign for an overall reversal in the chart, something to pay attention to. Very similar look with the PPO. I'd say the ADX is pretty neutral. The ADX itself, down around 14. That's very low. There's not a lot of strength any direction at this point. Some mixed signals from the MFI. 21, it's obviously much slower moving. Still holding over top of 50. 7 and 14, we're down low, but now curling back upward. Look like they're going to head towards that 50. Similar to through here, we're going to look for all three components to be trending over top of 50 to show that people are consistently paying higher prices for the stock. Accumulation distribution looks like it's bottomed out. We'll want to see that base hold, and certainly want to see this come through and start to make some higher highs to show that there's some substantial buying pressure coming into this play. You can see across this 9-month chart, buying pressure has been very weak, but as the stock sits on this double bottom, if we're going to see an overall reversal, we're going to look to start seeing some higher highs and higher lows in this accumulation distribution as well. Selling is still clearly dominant as judged by this shake in money flow, which has even shot down recently, saying over the last 20 periods, selling pressure is outweighing buying pressure. And realistically, again, across this 9 months, it's pretty evident from the shake in money flow, with only very little time spent in the green, that selling pressure has clearly been dominant. CCI, which is a measure of current price versus a 20-day mean, still in bear chart territory, but it's eking its way upward a little bit. It's actually a decent sign that it's holding an uptrend, but we certainly want to see it over top of zero. And the official buy signal for the CCI doesn't come in until a break of 100. But bottom feeders will look for early grabs to try and catch the full breadth of a move. So I just pay attention to this and see if it's going to continue to hold that uptrend. A break back down through negative 100 would be a bearish sign for the overall chart. Full stow in oversold territory. Starting to make a move upward with a little bit of buying pressure that came in. But again, giving early on signs that a potential shift in momentum could be happening. And the tricks, it's a lagging indicator, just not going to get much from this at this point. All you can really look for is something along those lines. Make a higher low, drop a bullish cross in the future. But on bottom plays, typically there's not much to be gained by reading the tricks. Relative strength index, right at that point that we want to see it break through 50, show that the bulls are taking control of momentum, as it did right through here when it was coming off this bottom late in September. The momentum finally went bullish, held over top of 50, and of course, that's when the strong gains followed. So that's what I'd be looking for at this point with the RSI. Of course, it always comes down to the candles, and this is a pretty clear-cut support at 65 cents. For me, it's absolutely mandatory that holds. If it falls through it, there's no other support in sight. And if it did happen to bounce back, that's fine. But for right now, that's a stop-loss area within 10% of Thursday's closing price to minimize any loss should some selling pressure come back into this. Because you can see through here, it can come in pretty heavy. So it's just time to see if the sellers are all out, if this is going to take on some bullish pressure again. From a resistance standpoint, 50-day moving average always presents a dynamic challenge. Right now it's at 74. Say that ties in with a little bit of static resistance as well. You can see right there around 75. Served as an area of resistance in September, a little bit of support in October, even back here in June. Pulled back above it, was a general area of support. So I'd look for that to be a pretty tough spot right now because of the static and dynamic resistance both being in that same area. Beyond that, I'd come up around 84 cents. Those old highs, there also happens to be a little small gap that's still not filled through there. But that's a pretty nice climb, about 20% from the closing price on Thursday. And as always, if it did go up to that level, pulled back, again, that's where I'd want to see this old resistance point serve as support and see if MELA can actually start to trend off the bottom across the course of several months, eventually try and get through the 200-day. And I'd expect some pretty heavy resistance back up at those old highs around $1.04. See, that was a general area of support earlier on in the year, and I'd suspect that's going to be a tough area of resistance should the price start to climb again and eventually work its way back up near those points. But what caught my eye about it is certainly the double bottom. They can be pretty strong patterns. With the indicators signaling potentially some shifts in trend and momentum, I think this is one worth keeping an eye on going forward just to see how it performs. As always, merely my interpretation of the MELA chart. Thank you for watching. Trade smart.